What's up, everybody? This is my dad and I, Greg, Herlean, Carson, Herlean here, coming to you from Southern California. This is our podcast we do every so often called Generational Gains, where we talk about real estate, business ownership, entrepreneurship, and family and our life from the perspective of someone who's been an entrepreneur for many, many years and someone who's been it for a couple years. So it's fun to share our perspectives, and we love getting feedback from you guys on what you guys want to hear from us and how we can continue to bring value to you. And so today we have a lot of fun things we want to talk about, things that are happening today. We have all kinds of deals available to us in a country and in a world right now that's, I feel like, chaos. There's so much going on, and there's a lot of things going on with the hurricane down in Florida. The debates are happening right now, and the presidential election's happening next month. We have a lot of sports happening right now. Things are a lot's going on right now. And so a lot of things we can talk about, but we have a lot of deals in terms of real estate that have been available to us and things we want to present to you guys and share what we've been around, the type of deals we're seeing that are being successful. And we have different deals to talk about that not everyone usually gets or sees on a normal basis. It's not a single family home we're gonna flip, not the basic stuff. And so my dad has a storage unit deal he wants to talk about and talk to you guys about what even investing in storage units is and how that works and where you're buying those type of deals. And so I want to start with him, asking him what he's been up to lately, why this has been a deal you've been around. Why is this something that's interesting?
Yeah, sure. So I think one of the great benefits of owning a trust company is I get to see what people invest their money in. I get to see when it pays off, how it pays off.
Yeah.
I'm not involved in hardly any of them, frankly, but I've also not only get to see that, I've also spent 20 plus years investing in different real estate transactions, and I think it took me like 17 years. So basically, just about 6 years ago, I feel like I have learned enough. Through trial and error and through hard work and or disappointing work, what I like. And so this topic's kind of a hot topic. People just throw out the term, I want to be invested in storage facilities, or I want to invest in RV parks or mobile home parks. And from an outsider, 30,000 foot level, that sounds good. I mean, I also have heard people say, I want to wholesale and just flip and make 50 grand. Well, that sounds good. But all of the things you've got to do and variables to create success in each one of these segments is unique to itself. And so storage units for me recently, when I say recently, the last 3.5, 4 years, have been probably my favorite asset class. And I don't know if it's just where I'm at currently, but I one thing I've learned as I've gotten older is I'm not as friendly as I used to be. Like, I'm not as outgoing as I used to be, and partly because I feel like I've been burned by individuals and partners sometimes. And so you second guess people, or you don't believe them. And so I also don't like working too much with contractors and tenants that live in a house, and just, you got to put someone back in there, or the air conditioner breaks and you're getting text messages. And this asset class of storage facilities is probably one of the sexiest. And when I say sexiest, I say it because it's one of the most boring asset classes. To me, the more boring an asset is, the sexier it is. Because it means the less phone calls, the less problems, the less variables. And so the reason why I want to talk about today is I had a phone call with my partners that do storage units, and I've done 2 with them. This is going to be the 3rd one I do, and it is a simple asset class, and I'll just break it down for you.
Yeah.
And so, in particular, what they look for, what we look for, is at least 50,000 square feet or more, and we like to be in an area that's outside of a major city. Okay. So this one happens to be outside of Denver. So it's in Pueblo. You do the math, and you do the how many households are close to different storage facilities. You check each storage facility, what their occupancy is, and then if you find one,
where do you find that information?
You call most of them.
Really?
Yeah. But like Pueblo, for example, has like I went over it yesterday. Don't hold me to this, but I think there's like 8 storage facilities, right? So you call and find out what occupancy is, how many units they have available. All of a sudden, you just do your own little due diligence, which doesn't take long. It takes a day or two, right? You get this information in these little smaller areas, and then you find one that might be way less in occupancy than the rest. So all of them, let's say, are 85 or 90% or more, and this one happens to be 65, 70%. Then you go online and you see how they're marketing. How is this one that's so low? Why are they so low? And then you find out, just like you'd go and find, a beat up home. This is a beat up asset that's not being managed properly. And what I like about this is not only that, well, once you see that, it's like, okay, cool. There's opportunity. All the other facilities are much fuller, 20% or more. That's a key indicator that there's definitely people renting. And then also the other facilities are renting out more per square foot. And so what you do is you go in, you purchase, right? It takes the whole acquisition process when buying these units typically take a while. Could take 6 months, maybe a year, sometimes of negotiations, etc. Then you go to close, and once you close, one of the first things you do, you paint everything, call it a liquid overhaul if you want to be sophisticated, but it's a paint job. Put in new security, more technology where people can log in on their phones and video. And then add a few other things where there's a need. For example, in Pueblo, Colorado, there's a need for overhead parking spots, not actually storage units. This happens to be 50,000 square feet on a 3-acre parcel.
So you have to make sure the storage unit's at least 50,000 square feet. And you said other ones are renting for higher price per square foot, meaning there's more units on the property?
There's opportunity to raise rents.
Okay. So you're not going in and constructing anything, rehabbing anything. No, you're just making it look pretty, add some extra fixtures.
What's key about the storage units is it's pretty simple. It's paint, it's security, fences, gates, and some little upgrades where like there's a mobile app. So they can put in, there's cameras, they can kind of see their stuff as well if you want. So there's little things you can add or change that don't cost too much. And so then you make those changes, and then within 90 days...
And you hire new employees too, and new management?
Sometimes. In this case, the seller is also the one that works there.
Oh.
He works on property, and he only has the doors open for like 10 hours a day. You go to you change that so it's available 24/7, basically. Put someone else in there, you can manage it from afar. And these little tweaks, all of a sudden, if you go and you change something, you increase it by $50 or $70 a month.
Yeah, but you have 1,000 units.
You buy it, and now you go from a $5.5 million valuation, and almost overnight. When I say overnight, as it stabilizes in the first year, you go to like a $7.5 million valuation just by making those tweaks, just managing it better, cleaning it up, giving better service. I like that because people don't live there. You're not getting phone calls late at night about plumbing, about air conditioning, and it's a bigger asset as well. And so the last thing I really love about storage units is the cost seg, the tax benefits. You're able to take some big tax benefits.
Before you say that, how do you purchase it? Can you get an 80% loan to value with a bank?
Typically 70, maybe up to 75%. So you put down 25, 30%.
And that purchasing entity, is it usually a fund?
No, it's investors. So like it could be me and one or two other investors plus them. And so let's say there's 5 of us. We go in and buy the asset. Let's say we all put up, it needs about $2 million. We all put up, what is that math? 300, 400,000, 400,000 each. You all put that money in, but then we're going to get about $1.5 million tax write-off
per person.
No, total. But that's almost every dollar we put in. We're going to put in $2 million and get $1.5 million tax write-off, tax credit. That's huge. So in year one,
it's free.
In year one, you basically stabilize it because there's no distributions. You stabilize the asset, and then in year 2, now all of a sudden it's cash flowing because you've increased the rents. Now you've stabilized it, increased the rents. Now you've created this value. And so
do you start taking distributions at that point too?
Quarterly. You'll start taking quarterly distributions. They're not very big. The whole play here is selling it in 2 to 3 years. That's the play.
Okay.
So
who would come in and buy it?
So that's the other part that I love about this is my partners and I have relationships with institutional buyers. Institutional buyers, they're trying to accumulate as many assets that are occupied as possible, and they're not looking for a big IRR. They need, a 6-7% rate of return, and have this asset that's appreciating, and they hold it, and these billion-dollar companies that own these huge storage facilities, they're the ones buying it. It's also why we already know who the buyers are, so we know what they're looking for, and they don't want to buy a 20,000 square foot facility. They're looking for 50,000 or more. It doesn't mean it's not a good asset class for, let's say, a new individual that wants to buy this asset and have it in their, as one of their assets on their balance sheet.
Is there enough cash flow to do something like that just personally?
Yeah.
It'd be worth it than buying 10 rentals?
It'd be the cash flow on those typically, just depends. Like this one, after year one, the cash flow is only, $15,000 to $25,000 a month. On a $6 million purchase, $2 million down. So does it make sense? Yeah, you do that math.
Yeah.
It's $300,000. It's going to be, maybe call it $200,000. You might get about an 8% rate of return on your money.
You do get tax write-offs. You do get
tax
depreciation.
Write-off. It's going up in value.
So it'd be worth it.
But that's why you were going to ask me. One of our units we're just selling now after a few years, because it's only cash flowing $15,000 a month. And if you can make $1.5 million or $2 million, how long on the sale would we have to keep it at $15,000 a month to make that money? So that's why you sell it, 1031 it, get into another project. And so they're very sexy projects. I bring this up for those of you that ever want to look into it. This is just like the cliff notes of one deal that we're looking at potentially closing here in the next month. That they're all around. You don't have to do a 50,000 square foot building, but these are, I think, hopefully what you got from this is a little bit of understanding what to look for in what markets. And I can tell you, my partner who looks for these, he buys and wholesales them too. And or he'll, there's opportunities for it. So if you find these assets, you're like, hey, look, I think I know a storage unit facility that Greg just described in that podcast. If you drive by them, find them. Like, we'll buy them, we'll pay out a $50,000, $100,000 wholesale fee. So if you're one of those individuals like, hey, look, I love all this, but I don't know half the stuff you just said. If you go buy one, you think there's one that's under market, not the right price, wholesale it. Just do a deal or partner with us on a deal, and we'll help you through the process and learn. So then you can do your next one on your own.
That's really cool. I had one more question with that before we wrap up. Kind of goes into this topic too, but more taxes. Like if you're going to 1031 up from there, when you sell it, it means you do have to have another asset you're ready to purchase by the time you sell. And I'm pretty sure that with a 1031 tax code or a tax law, when you 1031, you only can 1031 up an asset class. You can't 1031 down or equal. You have to buy something bigger or more to 1031. Is that not right?
I don't know all the 1031 rules, so I don't want to be the one that says that because I've only done it once. I haven't actually done it very often, and I did it with partners into another asset class, and I don't recall if it was a bigger asset. I don't think it was.
It might be different for storage units, but like if I go buy a single family home and I try and 1031 it, I can only 1031 into a duplex or a triplex, quadplex, more square footage. It can't be smaller.
Yeah.
And so I would assume it's the same for storage units.
Yeah, I don't know, but ask your CPA on that. That's a good problem to have, is that you've just made money and you want to avoid the taxes in 1031. I just know that that's our plan on this next one, this one that we're closing on, because our partners have said we're going to 1031 into another deal. So I'll have to ask them that. I don't know the rules, but that's a simple Google. You can check that out. So that being said, I mean, if you're in the market and you want to do a different asset class, I think one of the best ways of doing it, and I think that's probably a good segue, because when people tell me about wholesaling or buying luxury VRBOs, Airbnbs, it all sounds great. But I think going and trying to do your first one on your own is not the smartest thing you can do. I think the smartest thing you can do is if you like an asset class, let's say storage units, because we're talking about today, get with somebody who's been doing it. Even if that means on this first deal, you're going to give away half or majority of your profits, but you have the opportunity to learn.
And do it right, not lose money.
Learn how to take it down, how to manage it, who the lenders are for it. Getting all that information on doing a deal with someone else who has experience, Now is your content, your information.
Formula to go do it again.
So then you can go do the next one on your own. So that's what I recommend when doing it. Find someone who's already doing it. I've got a few friends that are doing it. It's not just Todd and Cameron. There's a few other ones that do it as well. Find someone doing it and partner with them. But there is such a huge opportunity from between cost seg, upside, selling to institutional investors, and there is some cash flow. They're just stable assets.
Yeah.
And people want to keep their junk. Which is the weirdest thing. And they will pay, and so and they'll keep paying even if you increase the rents, because they're afraid they might need that old whatever they have in their storage unit.
Yeah. Or like to your point, the one in Pueblo, if you want another spot for a car, second or third car, they want to leave there too. So
well, I mean, that was the one other opportunity they saw as they called around to look at all the competition. They asked about covered parking. Nobody had covered parking. There was a need for covered parking, and it's a very little capex, a very little capital needed. And we have this property has 3 acres, 50,000 square feet is about 1 acre. So we could actually grow if we wanted, but we can just put some covered parking in there and charge. Put some covered parking in there, which is only going to cost a few $100,000.
Yeah.
And you get 50 spots in there, and now you have boats, motorhomes, usually RVs, that will come and rent spots for covered parking.
Genius. Well, I want to get into the storage unit deal. If I wanted to invest in it, how would I?
Well, I don't pitch or solicit for money. First of all,
no, I'm just asking you from me to you.
But yes, I can share it with you and get you involved in it. Yeah. We're closing end of November.
Is it? Yeah, it's cool.
Yeah. So, but I think more than anything, this is a hot topic, and I think if you're looking into it, there's ways to get involved. And I would say the best way of doing it is these little towns. When I say little towns, you could be 15 minutes outside of wherever you live.
Yeah.
And those are the best pockets, because inside towns, you can't compete with these extra storage space, these big time institutional investors. They can buy them at a much higher price because they need a smaller return.
Yeah.
You and I want bigger returns. So we've got to go outside of the norm, stabilize it, clean it up, then sell.
Do you think this is a fad? Like storage units are going to go away in 5 years?
No way.
Not go away, but you think deals like that are not going to be harder to find?
No.
Really?
The reason why I don't think they'll go away is because there's always opportunities for people to be mediocre.
Sure.
So right now, there's just, and I don't think that's going to change in the next 5 or 10 years. There's just a lot of facilities all over the country, and owned by family, mismanaged by family. They think they're doing a great job, and just slowly but surely, someone will die in the family, or there'll be a partnership breakup, and there'll be opportunities. There'll always be opportunities.
So should I get into that asset class?
What do you think?
Yeah, I get it. I think that's a good idea. I like it.
Yeah.
I'll learn more about it. Cool. Well, I hope that brought value to you guys. Definitely did for me, learning about storage unit investing and how to buy those. And if you have them around your area, maybe just keep your eye out, look around, who's buying it, what does that look like? Just be familiar with what's happening in your communities. So,
yeah, I mean, get a wholesale fee. I've got relationships that would buy them, not including myself. If you just know of them, just let us know. We'll take a look and get under contract, and you could either partner on it or just get a nice $50,000-$100,000 wholesale fee if it's a big enough unit.
Yeah, sweet. I love it. Well, we always end our podcast with something we do at our family dinners called Sweet, Sour, and Service. We talk about some things that happened throughout our week that were good or poor or how we served. And so do you want to start? Let's do all three. I haven't done all three in a while.
All right, I'll start. Sure. I got to listen to some live music this last weekend, and there's just something about live music that's just special. Seeing artists that I've never heard of.
Yeah.
And I just think music is a lot like sports. It just brings people together.
Yeah.
Makes you not stress about some maybe things that are weighing on you. So that was fun this last weekend, listening to some live music. And then I'd say my sour is I just feel like I need to do a better job. I feel like as a father, not in particular with you, but it's really this last week, I feel like I'm making Cole and Cash are soft, and I feel like they need to do more, and I want them to be able to go out into the world like you with energy, with fight. And so it's actually really weighed on me this last week.
How are you going to make them work harder?
I've got some thoughts, but that's a whole nother podcast. So we'll talk about it today too. I'd be curious what you think. So that's what I was going to talk about today. And then the last thing, as far as service goes, I would say this. This morning, I called out my son from school, and I had to like call him out for a doctor's appointment to go to a baseball game.
I like it.
All right.
That's good. I'd say my sweet, or I'll start with service because that's on my mind. Right after this, I'm going to go to lunch with somebody who has to go to lunch with me and just ask me about real estate, ask me what I'm doing. And so I don't have a ton of time today because I'm leaving tomorrow for travel and we got stuff tonight, but I'm making time to go meet with him for lunch and give him my insights any way I can. So doing that today, which should be good. And then sweet and sour would be, I think sour is starting to get cold. I know fall is kind of fun, but like the summer is just the best. It's getting cold, it's getting dark, and it's not as like lively and fun. So I don't know. But sweet is all the sports that are going on. Baseball playoffs, hockey starting, NFL is on, basketball starting. Like it's pretty fun. So I got games every night, college football on the weekends. So it's been so fun to watch all the sports.
100%.
That's what I'm addicted to. So it's been fun. But that's how we always end our podcast. We hope you guys can implement sweet, sour, and service into your families as well and find ways to connect. So we are grateful for you guys being here, and I hope we brought value today. Thank you.
Have a good day.